Just gonna populate the disclaimer for everyone to look at again. And with that, Dee, you can take over the screen.
Okay. So I'm sharing my screen here, and I'm on a stock dividend screener. You could see that on the stock screener, we have these different tabs that show different statistics. We're going to go here on the dividends tab, and we have these column headings here. And the question was regarding this payout ratio. What does the payout ratio mean in terms of dividend, which is different than what a dividend yield is, because you can see here we have a dividend yield and then we have this payout ratio. So let's first discuss what the dividend yield is and what the payout ratio is, so you'll know the differences. And when we're up top here, you could see that Microsoft has a dividend yield of 0.66%, payout ratio 25.6%. And when we talk about dividends, a dividend is something that a company distributes to its shareholders, right? They give, in this case, we're looking at a cash dividend. So they take cash and then they give it to the shareholders, and then the dividend yield, what the dividend yield is looking at is how much cash was given to the shareholders. And if we take and in this case, it's looking at the last year's dividend. We don't know what the next year's will be, but we could take a look at the last year's. And if we sum it up, and let's say there was $1 dividend, right? So total of $1. And we then divide that by the current stock price. Let's say it's $100, we get 1%. And the idea there is, well, if you pay $100 and the next year's dividend is something similar, $1, then the dividend yield is 1%. Okay. So that's what the dividend yield is. And when we talk about dividends, usually companies pay a regular dividend amount, and they'll do it in a regular schedule, like once a quarter. So let's say to equal out $1, you get 25 cents each quarter. And now when they do that, okay, that doesn't mean that their income is always regular. That doesn't mean that they exactly make 25 cents each quarter, or that they make $1 each quarter. So the income that a company generates can vary. So sometimes they can make a lot of money. So if they make a lot of money, then that 25 cents that they pay out could be a small portion of their income. Sometimes they could make a little bit of money. Let's say they make exactly 25 cents. That means that they paid out all their income as a dividend. It could also be the case where the company had negative earnings. They didn't make any money this quarter. They had a negative earnings. Their expenses exceeded their revenue, and they lost money, but they still paid out a dividend from their retained earnings, right? They still have money in a bank. They could sell assets. So the companies usually still try to pay out a regular dividend, right? They'll still pay out 25 cents. It's not going to, usually it's not a variable dividend based on the income they earned. Okay. And we could even take a look at Microsoft's before I get to the payout ratio. Let's just take a look at Microsoft's. And usually if the company's doing well and starts making, higher revenues, higher earnings, they'll try to raise the dividends as time goes on. You could see here, they'll pay 62 cents, 62 cents. Then it looks like here they they increase it once a year, right? So you could see they'll pay regular dividend, then they'll increase it, then they'll pay, and then they'll increase 75 cents, 75 cents. So this is the trend in Microsoft. So then let's come back here to the stock screener. And we're going to come back here to the dividends. And the question will be, well, this is the dividend yield, but what portion of their income that they're generating is going towards dividend, and what portion of it, do they hold on to reinvest, to grow their company and so forth? Because if you pay almost all your income back out as a dividend, well, then the question remains is it sustainable? And how are you growing? How are you reinvesting to grow? So that's the question. Now, sometimes like a REIT or something has to pay out. It depends on your structure. They have to pay out the majority of their income. I don't remember what 80%. I have to look at it. If the rules change, they have to pay it out and redistribute it to maintain that status, let's say as a REIT or an MLP, but not a common stock. So what is the portion of the dividend, relative to the income they generate? And that's the payout ratio. So here, what this is saying is that 25% of the income that Microsoft generated was paid out as a dividend to investors. Okay. That leaves them with a lot of retained earnings, a lot of income that they could take and reinvest and grow their business and hopefully get a higher return, so they could continue to grow stockholders' equity and grow the future dividend and so forth. So a lower payout ratio means that there's a lot of income or a bigger portion of income that was retained by the company that they could use for reinvestment, research and development, hiring people, growing their business, acquisitions, and so forth. All right. And it also tells you how sustainable is this dividend, because a very high payout ratio, or you could have a negative payout ratio where you didn't generate money, but the company wanted to continue paying their regular dividend. That means now they're taking it from stockholder equity, right? Because if you're just paying out a dividend because you have money in the bank, but you're also losing money, that's even worse, because now it's very questionable if that dividend is even sustainable in the first place. So that's what the payout ratio is, and that's the difference between the dividend yield and the payout ratio. So dividend yield takes the dividend and divides it by the market cap of the company. Okay. The payout ratio takes, so this is, let's say this is the dividend amount divided by the stock price. Dividend per share divided by the stock price. This is the dividend divided by the net income of the company. So those are the two differences. Okay. The growth, this shows you how much did the dividend itself increase over a 1 year period. So if we compared it to the previous year and the next year, did it increase, decrease, stay the same? So this shows that Microsoft's dividend increased by almost 10%, 9.84%. Then we could compare that to what about the average annual increase over a 3 year period, right? Is it consistent, like year over year over year. And this showing that Microsoft's dividend looks like year over year, it tended to increase by 10% if we use the 3-year period. And how often did it increase? Did it happen in one time, 2 times? So this tells us here that in the last 3 years, Microsoft increased their dividend 3 times. So just using these statistics, and we could go look at the data like we just did to confirm. But just looking at these statistics, it looks like, okay, Microsoft looks like they increased their dividend once a year, 3 times in the last year, most likely once a year. It looks like they're pretty consistent with increasing their dividend around 10% year over year. Dividend yield itself is not very high. It's 0.66%. But at the same time, they're paying out only 25% of their net income as dividends. So they have a lot of more leftover money to reinvest and grow the business in other ways than just a dividend yield. Right now, you have a lot of net income, 75% almost of net income that's retained by the company to be able to reinvest into other projects, hopefully that they see that could generate much higher yields over the long term. So those are the statistics. And then this last one here kind of compares, were there any dividend decreases in the last 3 years? And that would be more in line, like if they had to decrease it, or sometimes you get a variable dividend, like over here, this one, Taiwan Semi, they have 6 times they increase, 7 times they decrease. So this looks like it's more of a variable dividend, where it's not just a regular, 25, 25, 25, whatever. It could sometimes go up, sometimes go down, and that could be based on a different methodology they're using, maybe pegged to, how much income they're generating or whatever it is. All right. So that, if you read, from left to right, quickly, you could kind of just assess, what might be going on. And of course, we could go then to Microsoft and confirm. So look for Apple. This is the next one down. We could see 0.46% dividend yield. However, they only pay out 15% of their net income as dividend. It looks like they increase their dividend around 4 to 5% per year. It looks like in the last 3 years, we had 3 increases, between 4.5%, 5%. We could go now to Apple and just confirm that, how consistent it is. So let's just go to Apple's dividend here. We could just here's the granular data. So you could see here, increased May 10th, 2024, increased May 12th, 2023, increased May 6th. So it looks like around May is where they tend to increase the dividend. It looks like they've been doing it, once a year. Going back, you could see maybe the rate of increase has slowed down a little bit. So here they increased at 7%, 4.6%, 4.4, 4.2. And they'll pay a regular dividend throughout the year. And then around May, they've been announcing, you can see here an increase. They just did an increase here in May 10th, 25 cents. So here we could do from a fundamental analysis, and even from maybe an analysis, how would that apply to your options? As a fundamental analysis, you could get a sense of what's going on you know, if it continues on this type of schedule, if it continues on this same trend, then it looks like Apple increases once a year. A smaller portion of their net income gets distributed as dividends. Bigger portion will get reinvested. And from a fundamental analysis, especially if you're looking for stocks based on dividend yields and dividend growth and sustainability, payout ratio, that you can make that assessment. Also, when we look at options, and part of options is, or a component of the option pricing model, is the cost of carry. And part of the cost of carry component is the dividend amount. And if without knowing all the future dividends, there's no way to know it. We would have to project it. So when we go into the options chain, let's say, right? Well, we don't know until Apple Computer tells us what will be the dividend yield in 2025. Here, 2000, there are options already listed with prices. As somebody, how do you come up with this price? You have to come up with a theoretical value, and you could see here going out, 389 days, 506 trading days, 564 calendar days. But to create a price for the option, we would need to create an input for the cost of carry, which means we have to project a dividend. There's no other way. We have to project it without knowing it, because if we say there's going to be no dividends, then we're going to misprice the option, because it's more likely that you're going to see dividends than not, given the history and the amount of money Apple has and how it's been paid out in the past. But anything could happen. So to price the options, accounting for more realistic variables, we'd have to start to project the dividend and the dividend amount and the amount of when the dividend will get paid, the dividend amount, how often it will get paid, when it will go X. And that's part of the option. You're starting to put in a guess, a projection. And how do we do that? Well, until the company releases a schedule or a statement or says this is when we're going next dividend, we would have to create a projection. And when we look at the historical data, we could start looking, well, in the past, what around when were the dividends paid? So you could see August, the beginning of August, although it's not exactly the same date. November, February, May, so forth. During the year, was it variable or was it regular, fixed? During the year, it's fixed. Then around May, they increase it. Okay. How much do they increase it? Well, it's not always exactly the same, but it ranges, right? So you could see here, we had some big increases here. We have increases, but they're slowing down. That means you're going to tweak your option prices based on those projections and your really guesses, the most logical conclusions you could come up with using that data. So that's why those are, and if you see a payout ratio that's not sustainable, you might even project that they might cut the dividend over time. If you're seeing, payout ratio or negative pay or a rate, where the dividend is coming from just from retained earnings and not income, well, then you have to then account for this may not be sustainable, and there might be a cut in a dividend, or or they might eliminate the dividend altogether. That's happened before. Let's take a look at Intel, where I believe they had to cut at 1 year. So here you go. So you could see here, look at this. Intel increase, 5%, 5%, 5%, 5%. And then all of a sudden, well, what happened here? They cut the dividend by 65%. And that could happen, right? Because if you're not generating enough income to sustain it, you're going to eventually you're going to have to cut it. You got to get the money from somewhere. So that's the differences. Hopefully that helps clarify what a payout ratio is and dividend yield.
That is super helpful, D. I didn't want to interrupt you, but Rob, did have another question about is there a filter to find out which dividend stocks also trade options? Is there a way, if you're looking at dividend stocks?
Yeah, I think under the stock screener, let me see. I think I have here options listed. You could just say has options. So if you click on this has options, it will filter out stocks. See 5,600 out of 11,000 that have listed options.
How do you get the stocks that also have dividends? Is there a drop down there too?
Yeah, I mean, you could just look at dividend yield, right?
Just sort by it.
Just sort of like over 1%, right? So over 0. So there you go. So then you got 3,100. So that means they paid some dividend. And then you could play around with these.
Awesome. All right. Great job. We're right up against the opening bell, 2 minutes away. Just a little housekeeping note. We have the 4th is Thursday, Friday we're off. That being said, Dimitri and I are off. So we will have a show tomorrow, then Thursday, Friday off. And then the following week, I have an event with one of my children. So I'm off on Tuesday and Friday next week. So shortened weeks the next 2 weeks. Obviously, it's summer. So everyone's in and out and on vacation. But great job, D. Thanks so much.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day. And hope to see you guys tomorrow.
See you tomorrow. Actually, another thing coming up. Next Tuesday, we do have our IBKR webinar.
Yeah.
So I'll put that link in tomorrow so everyone has it.